Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering Disney. Disney panics as hostile takeover artist slams their sloppy strategies. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I really appreciate you guys. Coming from Yahoo Finance, billionaire Nelson Peltz's Trian criticizes Disney's investment plans in a letter to investors. From Deadline, Disney just responded and they are freaking out. Disney tells shareholders the company is better off with Bob Iger at the helm in response to Nelson Peltz's spaghetti against the wall slam. And it was just today that Nelson Peltz said Disney is just throwing spaghetti at the wall. They don't have any plans for these strategies. They're not talking about the expected return on investment they're going to get when they invest $1.5 billion of our shareholder money in Epic Games. They're not explaining even the name yet of this new joint venture sports streaming service they're starting up. And according to the Wall Street Journal, the NFL and the NBA didn't even know this was happening. Streaming venture from ESPN, Fox, and Warner Brothers blindsides sports leagues. In this article, they talk about how the NFL commissioner, Roger Goodell, and chief business officer, Brian Rolapp, reportedly have looked at the league's contracts with ESPN and Fox to see if they could stop the joint venture. So the criticism coming from investor Nelson Peltz is that Disney doesn't think anything through. They don't have any accountability to shareholders to say, hey guys, we're going to take $1 billion of your money here and we're going to try and do this thing with it. And we're going to take another $1 billion over there and we're going to try and do that thing with it. So Nelson Peltz earlier today called all this out in a letter to investors and Disney got very upset. From Deadline, Disney tells shareholders the company's better off with Bob Iger at the helm in response to Nelson Peltz's spaghetti at the wall slam. In a letter to shareholders Wednesday, the Walt Disney Company said it's better off with Bob Iger at the helm and without board representatives from activist firms like Nelson Peltz Trian Fund Management. The problem, though, on Disney's board of directors is there are no major shareholders, no group of people who really benefit from the stock going up. I know it's hard to believe, but that is the situation. And that's what Nelson Peltz has been saying, and he's not the only one, that look, at least let a couple of people have some say in the company who own a couple $1 billion worth of the stock. Bob Iger and the board of directors don't want that to happen. Quote, delivering ambitious growth plans requires leadership with a deep understanding of the company's current strengths and assets, the letter said. Disney's board has the range of talent, skill sets, experiences, and professional backgrounds that are particularly relevant to the company's business and strategic objectives. The letter is the latest salvo in a proxy battle ahead of Disney's annual shareholder meeting on April 3rd. Peltz earlier in the day derided the company's recent moves as spaghetti against the wall and blasted Iger, who was a board member as well as CEO, in a CNBC interview. Quote, with Bob Iger at the helm, alongside the board of directors and senior leaders, the company is intensely focused on building for the future, the Disney letter said, illustrated with an array of color photographs and graphics with key financial stats. The letter went on to say that the company's strategic plan is already delivering results. However, previously, activist Disney investor Nelson Peltz, whose Trian Fund Management is clashing with CEO Bob Iger, blasted the company's spree of earnings-timed announcements last week as, quote, spaghetti against the wall. He also guaranteed victory in the proxy fight. Quote, with the stock waning and Disney facing another proxy contest, Disney appears to again be trying to distract shareholders with what we see as a fanciful tale, claiming it has, quote, turned the corner and entered a new era. And with that, Disney announced a slew of new promises and ideas, most still in the process of being developed, hoping that shareholders would just believe all was well and improving. Perhaps not coincidentally, as the Trian letter was hitting the wire, Disney announced fantastic forecasting and release date news, with the Marvel property immediately becoming a trending topic on social media. Earlier this week, it sent its own communique to shareholders touting the earnings and other activities. Trian is seeking to have Peltz and former Disney CFO Jay Rasulo elected to the company's board of directors. Disney formally rebuffed their request to be put forward as officially sanctioned nominees, so the matter will be put to a vote at its April 3rd shareholder meeting. Two other investment firms have also been rattling cages ahead of the meeting, but Trian, which has waged successful proxy battles against Procter & Gamble and other companies, has been the most vocal. Former Marvel chief Ike Perlmutter has endorsed the Trian effort and enabled it to leverage his shares in the fight. Nelson Peltz's letter singled out one move in what it called the company's spaghetti against the wall plan, a $1.5 billion investment in Fortnite maker Epic Games. According to Trian, the initiative, quote, lacks a product roadmap or expected return targets. And they say, well, what is the product roadmap? What's the return targets? It's really simple. The product map is, how is it that you're going to take money, put it into this company, build out the universe you're saying you're going to build out? What are you going to actually start to put out as products that are going to generate revenue? It's supposed to be more than just a financial investment in Epic Games. So explain to us, what are the plans for releasing products? Is that going to happen in a year? In 3 years? In 5 years? Also, what's the profitability expected to be like when you release these products on Epic Games? And what do you expect our return on investment is going to be? What profit are we going to make back from this $1.5 billion investment? And I'm no Nelson Peltz, but I was wondering that myself when I heard that Disney said they were going to spend $1.5 billion to acquire an equity stake in Epic Games. This is an announcement from Disney's website. And that they plan to create expansive and open games and entertainment universes connected to Fortnite. That's fantastic. I know from experience, though, when people talk about universes, they're generally trying to oversell something that they're trying to do. It's going to be a universe of characters. It's going to be a universe of products. Universe usually means we're spending money. We don't exactly know what we're going to do, but don't ask us any questions because eventually, if it works out, it's going to be amazing. Well, that's what it sounds like Disney's pitching here, and they're not giving out more details than that. Nelson Peltz has been around the block a few times, so he does understand, like, if you're going to say you're going to spend $1.5 billion, how much are we going to make back from this investment, and how much of a risk is this investment? Look at how much money they've lost on Disney Plus. Look at how much money they've lost buying the Fox assets, especially the India Fox assets. And ultimately, if you make an investment, part of understanding how much you're going to get back from it is, all right, well, how risky is it? And also, how could we have used our capital in another way? How is this a better decision for investors and for shareholders than our other options for the money? Similarly, the letter asserted that Disney's formation of a sports streaming venture with Fox Corp and Warner Bros. Discovery, quote, likely confused consumers, surprised important content partners, and competes with the company's own services. And that's an interesting point. I like the idea of Disney working with Fox and Warner Bros. Discovery, and not just Disney, ESPN. ESPN going in and owning a share of this streaming service. But it is true that ESPN does have its own relationships. They also didn't consult with the NFL or the NBA or any of the other sports leagues that any of the owners of this new streaming service have contractual relationships with. But if the NFL and the NBA are unhappy with Disney, even though they already have established contracts with them, this could be a problem. It could result in lawsuits. It feels like the sports announcement was rushed just so they could get a short-term increase in their stock price. And when I first saw the announcement, I started to think too, like, all right, so ESPN is going to be on this service, but also what about ESPN Plus? Like, so that's not going to be on this service? So I'm going to subscribe to ESPN Plus. I'm going to get ESPN through this new service, but then cancel my old cable. It gets very complicated. In an interview with CNBC timed to the release of the letter, Peltz was asked if he would sell his shares and retreat if he ends up losing the Proxy fight. Quote, oh, come on, we're not going to lose, okay? Let's get that straight, he responded. The people who own this stock, they want action. They don't want promises, okay? That's not what they want. We're going to win. We never plan and state what we're going to do if we lose because we don't lose. In addition to Epic and the sports joint venture, the company announced that Taylor Swift's Eras Tour concert film will stream exclusively on Disney Plus next month, a launch date for ESPN's standalone streaming service, and an animated sequel to Moana. All of that news, plus a solid set of financials, boosted Disney's stock price more than 10% the following day. It has since risen 22% since the start of the year, though it remains more than 40% below its 2021 peak. Peltz went on to destroy them with this. Quote, this company sells at a multiple of their pronouncements, Peltz told CNBC. All of a sudden, they've awakened and they want to make all these announcements. By the way, there's very little meat on the bones of their announcements, he said, extending the culinary metaphor. Quote, frenetic activity in the face of a proxy contest is not a substitute for a well-considered corporate strategy. nor is throwing spaghetti at the wall going to feed shareholders who've been starved of returns for so long. Trian's letter said adding a cartoon depicting current board members actually throwing spaghetti against the wall. Quote, Disney shareholders need the company to consistently perform under the watchful eye of a vigilant board. That is the recipe for good eating. When Nelson Peltz says he wants to be on the board of Disney and he wants to make changes at Disney to make the company more effective and efficient and do better for shareholders, this is what he's talking about. From Yahoo Finance, exclusive Unilever CEO says investor Nelson Peltz backs strategic changes. Unilever is a big consumer products company. Nelson Peltz is on their board of directors supporting this CEO, and they are making changes. These could be the same kind of positive changes that Disney could have. Unilever CEO Heinz Schumacher said board member Nelson Peltz is fully behind a recently devised strategy to reinvigorate the company, showing that he still has the backing of the activist investor who endorsed his appointment last year as CEO. Schumacher told Reuters he wants Unilever, whose brands include Dove soap, Hellmann's condiments, and Ben & Jerry's ice cream, to chart a systematic marketing strategy for its top brands. The CEO also said he will not shy away from laying people off if they need to. They have 127,000 people working at Unilever. His predecessor, Alan Jope, was criticized for allowing the group's brand portfolio to grow to around 400 brands, leaving management with little time to focus on its best performers. Some investors had also said Unilever was too slow to revive margins in the wake of the pandemic, while the likes of Fundsmith's Terry Smith lambasted the company for being obsessed with sustainability at the expense of performance. Despite that, Peltz remains on side with the group's turnaround plan, Schumacher told Reuters. Schumacher said Peltz's views were very much in line with Unilever's growth strategy. This involves investing more in its top 30 brands that represent more than 70% of sales, supporting its innovation pipeline for the next few years, and working towards a better operating discipline. Peltz also likes Unilever's model of splitting its business lines by category instead of region, Schumacher said. This is similar to that which Peltz's Trian Partners investment fund is widely thought to have influenced at rival Procter & Gamble, in contrast with Nestle's geographically focused structure. Reports emerged in January 2022 that Peltz had been building a stake in Unilever through Trian, and he eventually took a seat on Unilever's board in July. As of March 2023, Peltz owns about 1.5% of Unilever. By September 2022, Jope's departure was announced, with Schumacher eventually becoming CEO in July the following year. Quote, Nelson came on the board because there was dissatisfaction with the performance, Schumacher said. He saw an opportunity to buy at the share price where he thought there was potential. Schumacher worked with Peltz at H.J. Heinz when the investor was orchestrating a merger with Kraft Foods. His appointment as Unilever CEO was warmly welcomed by Peltz, who has a record of shaking up consumer goods companies. Nelson Peltz has also been recently seen with Elon Musk, and Elon Musk has made some very interesting comments about potentially buying Disney. We don't know if that's really going to happen, or if maybe Elon Musk would just take a big stake in Disney, or if Elon Musk would just support Nelson Peltz. He's already retweeted him, along with other criticism about Disney. And of course, Elon Musk is supporting a lawsuit by Gina Carano against Disney. There are a lot of connections with Elon Musk. We don't know what's going to happen there. But Nelson Peltz is a tough old guy. He's done this with other big companies before. He seems very confident, and it seems like he's probably talking to some of the larger institutional investors that, like Peltz, know that Bob Iger can make a lot of statements, make a lot of announcements. The stock price can go up for a little while, but that doesn't mean they actually have a serious strategy at Disney, and Peltz does not like what he sees. He'd like to get on the board of directors, just like at Unilever, plan out a strategy, and hold Disney management accountable to shareholders. Let me know what you think of all this in the comments below. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications, give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.